Now, I'm not going to hold you. Like, I always hear how difficult it can be in order to create an algo strat for you that you can extract alpha from the market from, right? What I want to do today is being able to go over a strategy that we created trading 0 DTE options. And these are option contracts that expire the same day. And this bot trades QQQ, right? And QQQ being the top 100 tech companies within the NASDAQ. So I'm going to break this down for y'all, and I want you to see that this bot's first day actually trading, it was able to take 4 trades, and of those 4 trades, it was a 75% win rate, and I was able to bring home 32 bucks, right? So what I want to do is being able to break down how can't stop won't stop works, and we're going to actually run a back test to see how this works, right? And actually being able to review some of these paper trades. Now, before we actually get into it, there's a few things that I want us to actually proper understand, right? And first thing is just being able to understand how can't stop won't stop works and being able to get the signal anatomy, right? So how a compression signal forms, what we're looking for is 3 things. Oh, and by the way, my name is Creative, and if you haven't already, go ahead and smash that like and subscribe button. What we do here at Creative Coder is that we go over different algo trading strategies. We create these strategies, right, such that we can be able to break down the barrier when it comes to being able to become an algo trader, right? I've only been doing this for about just a little over a year, right? But I still consider myself a super novice, and I've been sharing my process with y'all for the past couple of months now, right? So I just want y'all to be able to see my journey, how I'm able to go from creating a strategy to actual paper testing it. And I think this is one of the bots that we're actually going to put some real money behind it. And it's a little bit different from our others, but let's keep going. Right, so I want to talk about just a few things of this bot. Then we're actually going to get into the code. So one thing I want to talk about is how a compression signal forms. And what we're looking at is looking for, excuse me, is 3 things. The first thing we're looking for is a compression. These are the bars tightening beneath the 8-bar lookout. So if you're looking at a candle or a chart, excuse me, right, what we're looking at is the past 8 minutes or 8 bars. Now remember, each bar is going to represent 1 minute of action, right? And we want to be able to see within those last 8 bars, right, is there a compression that is forming, right? Is there a range of contracts that volatility is coiling, right? So it's hovering around the same price and it wants to break out, but it hasn't broke out that resistance yet, right? It's still in this little box here, right? And then once this box forms, right, we have a dotted line coil becomes the solid line range. All that basically means is that once we have a set of candles that is formed within a box, right, we're looking for it to be able to break through resistance. Once it breaks through resistance, and resistance is just a fancy way of saying a higher high, right? So once it breaks through resistance or breaks through support, we're going to be able to trade that direction. So here's an example here that the signal fires and then it broke through the resistance, and we're going to be betting it call because we're bullish on the market. So we're looking for 3 different things in order for this breakout signal to actually work. So this is not a signal that use indicators. This is pure price action, right? So another great thing about this bot is that what I've learned is that there's some places where stop losses make sense, and there's also some places where velocity stop makes sense, right? The difference between the two is that there's a fixed stop loss, meaning, so what is a stop loss? So a stop loss triggers whenever the position goes against us, right? So right here we have a fixed stop loss of 12.5%. So whenever the position goes against us, negative 12.5%, we're going to stop, sell the position, and get out and being able to recoup as much capital as possible, right? So we exit any price touches that is negative 12.5, and slow bleeds trigger the stop loss. These are unnecessary exits. So what I notice is that, all right, instead of having these fixed stop loss, I want to have a stop loss that is based off of the velocity of how much QQQ has been moving, right? So I'm using ATR, and ATR is the average true range. And the reason we're using ATR is because now we can measure true velocity intraday, right? So we have it at negative 10%, so about 2.5% delta difference. and we're exiting faster, excuse me, and these slow bleeds get the full 3 minutes to recover rather than being able to get triggered. And another thing that I noticed, the reason I pivoted from the fixed stop loss to the velocity stop loss is because I was noticing that I wasn't giving enough of our positions enough time to recover. Right. So that's why with this velocity stop loss, we're giving positions enough time to recover. Whenever it does dip, and there is a true dip, we're getting out and we're able to properly go, fam. So the first day of trades, right? I want to save this slides. Actually want to talk about this back test real quick, and then I'm going to actually run the back test so y'all can actually see it. Now, I know the numbers look ridiculous, right? But follow me, fam. But don't follow me, but follow me, right? So we tested this we did the back test on 3 different years. The first year is going to be a 2022 bear year. Now, unless I tell you otherwise, right? All of our strategies are going to start with $100. Because we want to be able to dispel the notion that you need thousands of dollars in order to invest in options, right? Especially when it comes to algo trading. If you do it right, bruv, you're able to not only see it compound properly for you, but you're able to see you're able to see a robot being able to being able to transact or being able to pull alpha out of QQQ based off of the strategy that you're giving it. And the strategy that we're giving it is a pure price action strategy, right? So we're looking for a coil, or excuse me, we're looking for a compression, then we're looking for that box to form, and then the signal is going to fire, right? So based off of the back test is that we're looking at 2022 as a bear year. We had 409 trades, and the max drawdown is about 16.2%. So what this lets me know is that, all right, at one point in time, the strategy lost $16, right? Just if you're starting at $100, right? The strategy felt so bad about that it was able to start from $100 but bring in $208,000, right? Which is kind of stupid. 77% win rate. Now, 2023 was a recovery year. We had 597 trades. And one thing that you do see is that as we do go up a year, we're seeing that max drawdown drop a bit, which is something that we're looking for. Win rate is increasing, ending balance is increasing, and drawdown is dropping down as well. And drawdown is just letting you know from peak to trough, right? So at one point in time, the strategy lost $16, but it was able to rally to 208,000. At one point in time, the strategy lost $10, right? But it was able to rally, excuse me, 327,000. And then 11% then rally to 508,000, right? So you can see here we're holding strong above 72% across the years for this particular strategy. So let's go look at the code real quick, brother, before we actually run the back test. And what I want to do is just quickly just go over this one more time and how the strategy works. So if you want to be able to recreate this on your own, you can, right? So this strategy trades from 9:42 to 11:05, and we have a 3-minute buffer for end of day exits. Howard, end of day at 11:08, there's no more trades, no exceptions, right? This strategy trades up to 3 trades per day. Not forced trades. These are valid signals, right? And we're actually going to look at a couple of these signals. Maximum hold time, we're looking at 3 minutes, and we already talked about how the signal works. Well, let's just go over this one more time, right? So a compression is forming. We have 3 consecutive bars where the range is less than the 8-bar simple moving average times 9.8, right? And then this is how it's going to look. There we have step 2 is the box that's form. Step 3 is going to be the body breakout, right? So this is, remember we talked about it before, right? As soon as we have the compression, then we have the box that's formed. As soon as we have a breakout in either direction, that's what we're going to be trading, right? And then let's actually go look at the and then the option criteria. What we're looking for is this is the delta range 0.25 to 0.55, right? The premium range is 0.2 to $2, right? And then we're ranking by by gamma, and gamma is going to be the accelerator pedal, right? Gamma is a Greek when it comes to an option, and the reason we're using gamma is like your jetpack, right? Your turbo booster, right? So if we have high gamma, then what we're looking for is that option contract has the best chance in order to bring us back a little bit of profit, right? And there's a couple of things I had to adjust for this. So let's actually go look at some of these trades, right? So let's look at this first trade. Now I know I told you, Bravy and Bravette. I don't want to be sexist here. Uh, so this is CWSW, right? This was a call trade, so we were bullish on QQQ at the 713 level. We did come in this position at 78, right? Excuse me. We tried to get it at 80 bucks, but we got filled it at 78. Now, why is it not 80 cents and 78 cents, right? Because this is option trading, right? So with option contracts, you have to be able to understand that for every one option contract equals 100 shares, right? So for this one option, this is two contracts here. So for these two contracts, that's going to equal 200 shares, right? So what we did, and both these contracts in total cost us, we tried to buy it for 78. We got it filled at, we tried to buy it at $80. We got it filled at 78, and we were able to get out at $88, right? So make a nice 19% or 12.7% ROI. And this was a 3-minute hold, right? I wasn't even on my computer. I came back and I was like, oh, okay, that's nice. You went ahead and traded for us. That's what's up. So that's why I like to being able to have algo trading right now. There's one that didn't work out for us, and I want y'all to see the other half of it, right? Because I just don't want you to see the good. I also want you to see the other half of it. So this was when we were bearish on QQQ. We thought the market was going to go down at the 711 level. We bought 3 contracts at this point in time, right? So 300 shares we were leveraging and thinking that QQQ was going to be bearish, right? We bought in at 55, and after 11 seconds, the market turned against us, and then we got out at 50, right? So that's where that velocity stop came into play, right? ATR, are we seeing a sharp move towards the buyers or the bull side? So that's what made us get out that position a little bit quicker, right? So as you can see, the bot out of its first day is batting about 0.75%, right? 75%, 3 out of 4, right? That's not bad at all. And now I want to see how consistent this bot is when it comes to being able to make it. So let's look at a couple of these signals, right? So again, that box, right? So here's that box that formed, right? So once we have that box that forms, now we're looking for a breakout. Now here's that breakout that formed, and here's the put contract that we got into, right? And then let's go look at another signal. Then we have here the box that formed, right? Then we have a breakout, and that breakout was a put signal. And then one more, right? We had a box that formed. Then we had the breakout, right? And then this was our call signal. So if you want more videos like this, don't forget to hit the like and subscribe button. It is your boy Creative. I'll be back at it again with another episode.